Hey, what's up everyone? Welcome back to another Bitcoin Elliott Wave analysis. In this video, we're going to do another top-down analysis starting on the macro. So please make sure to watch this video in its entirety, as it is important to understand the context of how all of these wave counts are intertwined with each other on all respective timeframes, all the way down, going down to the lower timeframes. But before we begin, if you are interested in seeing more of these periodic video updates for Bitcoin, please make sure to hit that like button, subscribe to the channel if you haven't already, and also comment down below if these Bitcoin videos have been helpful or is important to you, at the very least, to let me know, because we haven't been gaining much traction in these Bitcoin video updates. So starting off with the macro, the counts do remain the same, as it does move quite slowly. I've already explained in many of my past videos on why Bitcoin has already branched away from the timing aspect of how everything has been playing out when using the Elliott Wave Theory as the baseline reference for the price action. So for example, the biggest giveaway was that all of the macro waves 3, 4, 5s have all played out after the halving has occurred. So you can see there's a 3, 4, 5 here, 3, 4, 5, 3, 4, 5 in each of their respective lower degrees. But in the current cycle that we are in right now, which is the post-fourth halving cycle, you can see that we were ahead of schedule for this wave 3. This wave 3 happened right before this actual halving happened. I've mentioned this many times, and this only led us to two choices on how this could be resolved. One way is that since we are ahead of schedule, that should theoretically mean that we should have also been ahead of schedule for what could have been a bear market to come earlier. We have had that opportunity to go straight into a bear market. We did not, though. We broke above the previous high, and we're still distributing above it. So this is why I do not agree with that idea. So it leads me on to the second idea, which is an extended fifth wave of the local timeframes, which we also presumed quite early. Extended fifth waves are not rarely seen in the macro, but with the context of the waves you'll see in just a second on the more local time frames, you'll see why that is most likely the case for this current cycle. Now you may be asking, okay, why though? What's the overall macro reasoning behind this? Well, since the timing aspect of this is not really of an issue, it doesn't take away the implication of the actual price action slope in the net gain that we must observe, meaning that if we are missing the fractal parabolic slope that typically follows after halving occurs, you can see by these green boxes, then we have to follow that idea that there is a missing leg to the upside. So this is where these green boxes actually come in to help us understand the fractal nature of how Bitcoin has played out in the past. Now, past price action is not indicative of future price action, but it certainly does rhyme, especially if you have years and years of data. In order to fulfill the price discrepancy that we're currently at with these levels, the only way to achieve higher levels would be via an extended fifth wave of the local time frames. And additionally, from a market psychology aspect, these extended fifth waves usually happen because it reflects the final push and overtakes expectations. When a lot of people are expecting a bear market to come any moment, it just continuously disappoints and we just continue further to the upside. It's usually when latecomers, these FOMO latecomers, come into the market who missed out on the wave 3 or even the wave 1s, they'll finally capitulate and chase that last final move to kind of make up for what they have missed in that wave 3. So that is kind of the better late than never type of approach that provides fuel for the extension. Very simple. And smart money may be again distributing at these levels over here, and the smart money that is, will even also get fooled. And that's when the public continues piling in, and the supply demand imbalance creates exaggerated moves before the actual reverse happens. And in modern markets like crypto, late cycle speculation and the derivatives market, especially where you can trade at 100x your position size, it will usually amplify the push even further. And there's no better time to do it than now, especially breaking the previous high. And even a relatively small inflow of hot money can stretch these wave 5s far beyond what wave 3s can theoretically achieve, just because you will have far more hot spots of low activity in the shorter time frames like we are doing right now. And that's what makes it ironic, is that you'll see very low volume at certain times within these fifth waves that makes it much easier to move the price to the upside. So that's my current take on how I'm seeing it. That doesn't take away, however, that we won't see an eventual bear market, because I absolutely do see a bear market coming. Why? Because like I said at the beginning of the video, it still doesn't take away the implication of how the rhyming past cycles have played out. Yes, we are seeing a bit of an extended cycle. Yes, we are seeing a slight shift in timing, for example, of this wave 3. But no, it doesn't take away the idea that a bear market is not going to happen, because it will, in my opinion. It's just the timing of this. And more or less, the timing of it is actually quite the same. It's just how these wave 3, 4, 5s are actually playing out. There's a slight shift in the actual timing aspect of it more than anything else. All we're doing is speculating on how the distribution dynamics of each waves is playing out and narrowing down the possibilities as best as we can. And this is just my vision on how this will be resolved. So this is the macro overall implications. Nothing has changed. I still do think that we are in an extended fifth wave, and that brings me on. We have to understand how this fifth wave is actually going to be resolved, right? This local time frame, how is this fifth wave playing out? And that is where I am going to give a little bit more detailed approach on this, because in my opinion, I think we are still well within the bullish territory, even on the local time frames, on the daily time frame. That is, you can see that even with an expected pullback that we have been discussing on the shorter time frames from the previous couple of past videos, even a pullback down to the 38.2% around the $101,000 levels, even all the way down to the $90,000 levels, is still extremely bullish. Again, it doesn't change the implication of the macro time frame. This is why we need to do a top-down analysis to understand that the top is still very bullish, even though the local time frames, as we start to zoom in, can still call for corrections. So that being said, nothing has changed here as well. I think it's quite simply to say on the daily time frame that we are, objectively clear with these waves in as a wave 1, 2, 3, 4, and with the current context of what has happened in the past few months, where we broke the previous high over here. It just makes far more sense to kind of subdivide this even further. That led us to even further conviction that this is working an intermediate degree of a fifth wave extension of the primary degree. So that being said, this here is now established, and we are now working with what's going to be the more profitable wave against that wave 3 that I discussed on the macro, which is that everyone had expectations for this wave to be the longest. But as we started to figure out the distribution dynamics, and with all these pullbacks in mind, the context of these pullbacks, it just helps us further deviate away from this wave 3 being the longest wave. And now we can say that this wave 1, 2 is in of the intermediate, and what is happening so forth. These are now going to be far more shallow pullbacks. And you can see right now we have only met that 23.6% at the $109,000 levels, and we can all the way go down to the 101 or the $90,000 levels. Proven until, innocent until we actually see these levels break above. There is two possible pathways. One is now, and one is at a little bit of a later date, which is what I'm currently seeing on the local timeframes that I've been discussing in the previous videos. So now we have to zoom into how this is actually playing out. How are we going to get that slow local timeframe pullback? Are we just going to continue up and continue the larger macro timeframe painting a picture? Let's figure it out. So if you go onto the 4 local timeframes, I've been discussing this idea for quite some time. If you're following me on social media, I've been talking about this for about a month or so. We've been talking about a potential pullback about after a possible corrective moves that has been happening distribution-wise, that is, and all these overlaps are happening. We were still bullish, but that impulsive wave that we were talking about, that 1-2-1-2 idea, the nesting structure, started to deviate away from what we were actually wanting. So that led us to a different pattern recognition, which is a motive wave of a 5-wave structure, but still going into the general direction, but it's working correctively because there's an imbalance between the bulls and the bears that simply do not know or how these pullbacks are supposed to occur, and where these actual continuations are going to occur. Usually it's more of a timing issue. So that being said, we saw this idea as a larger leading diagonal variation to happen, and you can see 4 out of the 5 waves at that time of the recording and writing, we saw that these were all corrective moves, and that led us to the idea that we're going to go for a larger pullback. And lo and behold, look what we are doing right now. We got this A or W or B or X wave to the upside, and you can see this is exactly how it's been playing out. Now, this is a very pivotal moment in my opinion. I think that this can still, no matter how accurate this may be, we still need a confirmation of breaking these lows, right? So if we only have the two components of this, simplified zigzag or multiple zigzag, we still need to break this previous low here around 107,000 before continuing the idea of that primary idea, because an idea that's 99% fulfilled and that offs just that chance that a 1% move where the markets make a completely reversal move and we don't fulfill it, it's still completely wrong. It's an idea that's wrong, and I'm simply happy to say that I would be more than glad to say that I'm going to be wrong if this idea doesn't play out. But so far, with all the current data that has played out, it has been playing out quite nicely in our favor. That being said, with the current local timeframes, we have the 50% met. We have some Fibonacci confluence being met with the internal structures as well. We have this ABC to the upside. We're meeting equality already. We are getting a fair bit of resistance at these levels over here in between the 50 and the 61.8%. Now, I would say this idea is going to be completely invalidated at the point of the 78.6 or even the 88.6. It's a far lower probability at that stage for a reversal to happen at that point. It's far much better to say that we are working in a 1-2 of some sort. A very low probability. So at this point, it is kind of boiled down to what I mentioned on my social media just a few moments ago, saying that, this is just more of a logical versus emotional approach. Now, do we trust the logical view, which points for one more leg to the downside, or do we give into the emotions and hope that the market is secretly more bullish than expected? And there is a possibility, right? There's always that possibility of an unexpected reversal where we may have a different count, where the lower probability scenario is playing out to be a series of 1-2s in the making here, and that could be well the case. But for now, with a more logical approach, and since we have been narrating this for quite some time, for the past month or so, and since it does look objectively clear as a three-wave structure variant, it just makes more sense that since we are now at a resistance, until it's proven otherwise, there is a far higher chance at this current stage that there is going to be one more leg to the downside to fulfill a partner leg for what we have created for this wave W or wave A to the downside. So that's, in my opinion, the current case right now. Nothing really has much changed since the last video, and more than anything else, it's pretty much even just higher conviction at this point. But I'm happy to be wrong, and I'm sure by the next video, we'll have far more evidence. But if you would like to see this kind of step-by-step approach on how this is all being played out, maybe even more on the local timeframes, again, hit that like button, subscribe to the channel, comment down below if you want to see more of these Bitcoin video updates. Give your cause here, ladies and gentlemen, because right now people love these altcoin video updates, and I'm more than happy to do for both of them, just depending on the interest. And again, if you are interested in seeing more of these Bitcoin video updates or even Bitcoin charts, I do offer a membership, and the links are in the description below for both Discord and Patreon. Patreon is more of a kind of entry-level membership where you do monthly. Discord offers far more substance, far more analysis throughout the week. So if you're interested in any of those, don't hesitate to reach out to me. The links are in the description below. And with that being said, thank you so much for watching this video in its entirety. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.